We are back at it again here with another video, and here we are with the SPY stock, SPY stock, S&P 500, doing a full transition from the rip area last week to the dip area at today's open, and doing a full transition back up. Now, in today's volatility, our SPY bot sent out a bull indicator at 12:40 p.m., and from that moment forward, inflows crossed the midpoint to the upside, full strength there on 42 vision, and call options went up 200% plus within an hour, guys. If you guys want to receive this clarity and edge of the charts, you can now gain access to it as well. The link is down below in the description to the 42 vision indicators, getting connected over to our bots and becoming part of a growing community of investors, all looking to learn and grow together by receiving this clarity and edge over the charts and using these resources to maximize in either direction, whether stocks are going up or going down. So here we are with the SPY, the S&P 500 index, and the SPY stock is pushing up higher here, trying to break through the resistance of Thursday of last week. We're going to talk about what's going on here with the inflow versus outflow and the bull and bear indicators. But before we do, I want to share with you guys the home run opportunity that was mentioned this morning over at the Discord. So the home run of the day was spectacular and beyond expectations. And if you guys want to know about these stocks early on and receive this clarity and edge of the charts, you can now gain access to it as well. The link is down below in the description to the 42 vision indicators, getting connected over to our bots and becoming part of a growing community of investors, all looking to learn and grow together. So the home run of the day was from our Netflix bot. Our Netflix bot, NFLX stock, bot sent out a bull indicator at 12:46 p.m. and from that moment forward, inflows crossed the midpoint to the upside, full strength there on 42 vision, and call options went up 70% plus within an hour, guys. If you guys want to receive this clarity and edge of the charts, you can now gain access to it as well. The link is down below in the description to the 42 vision indicators, getting connected over to our bots and becoming part of a growing community of investors, all looking to learn and grow together. And we look forward to having you join us, and we strive for opportunities like these every single day. Let's jump into these charts. So here we are with the SPY, the S&P 500 index, doing a full transition from the rip area on 42 vision of bright green bars to the dip area of white with red borders into today's open. And from that area, it found support, a double bottom here at the beginning half of the day. If we zoom in here and look at it on the 15-minute, you could see it there. On the 5-minute, same thing, right? A double bottom there, and that's when things started to move up higher. Found strength and support there, and it did a full transition from the dip area into the rip area in today's volatility. Now, if this is your first time coming across the channel, this is 42 vision, which allows us to see the dips from the rips to the dips, and where the strength and weakness lies within the charts. And we also use our bull and bear indicators and inflow versus outflow as an extra layer of confirmation, which I'm going to pull up here and you can now gain access to as well. The link is down below in the description to the 42 vision indicator, getting connected over to our bots and becoming part of a growing community of investors, all looking to learn and grow together by receiving this clarity and edge over the charts and using these resources to maximize in either direction, whether stocks are going up or going down. And in today's video, I'm going to pull up the inflow versus outflow indicator, which adds that extra layer of confirmation and gives us that edge within the volatility. So here we are with the SPY back under a bull indicator after getting a bear indicator up here at around 408 in the pre-market, and outflow started to dominate here at the opening bell. And that didn't last for very long. Things were sitting sideways. Inflows were trying to pick back up. The transitions began right from the dip area into red with green borders, dark green and bright green. A bull indicator popped up in the second half of the day. Here it is at around 407.27 to be exact. If you want to round that down to 407, you can. And we talked about how important it was for the stock to find support, specifically the SPY stock, right? SPY stock, S&P 500, to hold itself up above 405, 406 area. If 407 broke, it did, and it formed a double bottom effect here from Thursday to today, and it's trying to bounce back up to break through here in the after hours and the ending of the day, the resistance levels from Thursday. But if you zoom out even further, this is nearly a triple bottom here, right? Going back and forth up to this point, trying to break out of this range, holding support multiple times in that 406, 405 area, trying to bring itself back over 408, keeps rejecting 409, and here it is today, breaking above it on its way towards the 410 area in the post-market hours as we see it. So let's talk about what's going on here and what are the key levels I would watch going into tomorrow. So the first thing here is to zoom out and look at this from the 1 hour, and we could see here that inflows cross back over, and we have a bull indicator here again canceling the previous bear indicator at around 408 area. It's hit a bright green bar so far, and the inflows are at the highest point that we've seen in the last 3 days, trading days to be specific, since the outflows crossed over, and it's sitting at 2.02, and the previous high was 1.16. So it's going to be very important for these inflows to continue higher, and based off the history of the chart, it has room to go higher, right? It's been at highs up here of 4.28, highs up here of 6.45, and even 5.18 based off the history of the chart back at this time when things were looking pretty strong, and it moved up from 403 up to 412. Now, it's not guaranteed to make the same exact move if those inflows were to pick up to that height, but something to not ignore and miss here and overlook. If not, watch it very carefully. That's going to be critical and crucial. On the 30-minute, it's sitting at 2.26. The highs on Thursday last week in the after hours was 2.6. So it has room to go higher. And based off the history of the chart, it hit highs here as well of 4.17. So that is critical. Inflows are back over on the 30-minute. And on the 15-minute, inflows are back over here, and we see it sitting at 1.90 under a bull indicator since 407 as well here, and it's up at 410. Full transition there from the dip to the rip area so far, and it's going to be crucial for these inflows to hold up, because if outflows start to begin, that could start to quickly reflect into the charts, right? You could see it right there from Thursday to today, how fast things started to reflect once those outflows began, followed by that bear indicator falling from 408 to lows here of 405, 406 area. So let's talk about the key levels here. So the first thing is support, guys. The support levels are going to be crucial, and the first support is 407. Below that comes 405, and below 405 is 402, and it's going to be critical how these outflows react if they cross the midpoint, and how deep to the downside they go, and if these bull indicators on multiple time frames get canceled by bear indicators. Now, to the upside, it's going to be crucial, like I stated, for these inflows to continue to stay up and stay green so they can hold the strength here of this bull indicator, continue the staircase effect to the upside, and the first resistance above 410 is 412, and then above that comes 415. Those are the key levels I'm watching to the upside and to the downside. I'm going to watch these bull and bear indicators very carefully, the inflow versus outflow. And as always, guys, thank you guys so much for watching. And I'm going to share with you guys a recap on a Google option that I shared with you guys over the weekend of a strike price of 108 expiring this week and how it performed. And I have another one to share with you guys that I found very interesting in today's volatility. So let's do a quick recap here on Google. So Google was the one that we talked about last week. The options chain was showing a very high ratio, right, of open interest, right, compared to the volume. And a lot of that volume actually translated into open interest, and it actually ended up in the money pretty deep, right? As you see it there popping up on the screen, Google was around $1.50 last week on Friday at the close. Today it opened up not that far from that level. The lowest point that it hit was 170, and it ran up upwards to almost $3, right? Nearly a 90%, 100% plus move in a matter of hours. And right here you see it those outflows continued as we broke it down in the previous video. They crossed over the midpoint after the bell, got a bear indicator. Same thing here on the 15-minute. Lots of weakness, and things move pretty quickly to the downside. So a lot of opportunity there in today's volatility. That does expire later this week. Does it guarantee that it could continue? No, but something to not ignore, how it's actually been weak here. And if it rejects off of certain resistance levels and comes right back down, it can retest these lows of 105 or nearly even lower. And as I broke down in the previous video, that it was trying to go ahead and hold itself up, and those that position themselves into that specific contract, they believe that it could actually end up gapping down, or they were just hoping it would get somewhere near the money, right? Or in the money. So we saw that happen, and nearly all of the gains on Friday were given just right back. Now it's trying to find support there, and inflows are trying to pick back up. So things are getting a lot more riskier here going into tomorrow and the rest of this week. But this is a contract that expires later this week, which is pretty volatile, and the theta is eating it up really fast. But within the volatility, it presents opportunities, just very high risk. And a lot of the move already happened from way up there at 109, 108 area, all the way down towards 105. Not stating it can't go lower or higher, but we're already seeing inflows trying to pick back up on the 30-minute, and on the 15-minute, it's back above. And the 1 hour is going to determine if the bulls reappear, if they bring it back up, or will the bears continue to tear this one down, especially that it has a bear indicator on multiple time frames. So that's the recap on this one. Nearly 100% plus move from Friday to today, and at the open, it literally presented nearly the same opportunity from the close. It was just off by a few cents, about 20 to 30 cent area of difference. Now, the stock that I found with some really high volume today and a very interesting open interest and ratio again is Apple, guys. So if we go ahead and look at it, Apple's under a bear indicator on the 30-minute. Inflows are trying to pick back up here. I find this very interesting. And then on top of that, we have the 15-minute back above the midpoint trying to pull upwards. It's going to be critical for bullish confirmations on the one we're going to look at in just a moment. But things are trying to find a bottom and bring themselves back up under a bear indicator as well. And when you zoom out and look at this on the 1 hour, you can see here inflows trying to pick up, trying to go towards the midpoint under a bear indicator as well. So there needs to be more confirmations of bullishness, and this is something to watch going into this week and even tomorrow. And again, this is not financial advice. This is just my opinion and perspective alone on what it is I'm seeing, and I'm sharing it with you guys. And this is for entertainment and informational purposes only. And I hope you guys learned something new from these videos. So let's go ahead and look at the options chain and how important it is when it relates to the charts, and how it's not that far off from where we're currently at. We're currently sitting at 161.76. We're going to look at that in just a moment. So when we come over here to the options chain on Apple AAPL stock, we could see the strike price with the highest volume here on the call side is 162.5, and we're currently sitting at 161.7. And we also have the volume here sitting at 67,000, and open interest is 9,000. So open interest is pretty high already, but compared to the volume today is nearly a ratio of about 5 to 7x. That's pretty large, and the contract price right now is down nearly 60%, and it's sitting at 1.36. Now, this does not guarantee or mean that this option has the potential to go up because it's down. But what I find interesting is the puts are actually up today. These are down, and the amount of volume compared to the put side is pretty high here on the call side. Now, you do have an amount of high put area here, but keep in mind these open interests are higher and the ratios are lower. This is the one that really stood out to me. It does not guarantee or mean it's going to go up. Remember, anything that I share here is for informational and entertainment purposes only. It's not financial advice. I'm not here to tell you to buy, sell, or hold any positions in Apple. I'm just here to inform you guys on what it is that I found interesting from my due diligence and sharing it with you guys. And I hope you learned something new from this information. So here we are at 136, sitting with the open interest at 9,000, volume 67,000. And it's going to be important to see tomorrow at the open how much of this volume translates into open interest. And it could show us how many people that were actually in today's volume are actually swing trading this because they believe that this could go into the money at some point before expiration. So very interesting. This is the one that stood out to me the most as I did my research, and you could see it in the charts. Everything's pretty bearish, but the bullishness is in a hidden divergence, trying to pick up here on the 30-minute, on the 15-minute back above. And when I started this video, no bull indicator. Bull indicator has popped up, and the 1 hour is trying to pick up as well. Now it's still far away, but it's picking up here, trying to head towards the midpoint. So there needs to be more bullish confirmations, but it's not that far from it. And I found it interesting, the amount of volume to open interest, and it's not that far from the current price, 161.80s, and that one is 162.50. Not that far from where it opened up today and where it was in today's pre-market. All it takes is one gap up or one big candle within this week or even in the next few days, and things can start pushing up pretty fast, especially if these inflows pick up and the bear indicators start to get canceled by bull indicators. As always, guys, thank you guys so much for watching, and let's make some money.